session today for all of you out there following myself. I've got George Nguyen here from Dual Tax. Dual Tax is actually a business I've been following pretty much since the second half of 2020 because they are actually quantity surveyors, but they do their social media in a very engaging and fun way. And you guys have seen my social media, and you guys see myself talking a lot. And I thought, hey, we're quite similar. But I also thought that the content from Dual Tax is very engaging and very educational, which is what I'm all about. And I wanted to share and introduce someone from Dual Tax and talk to you guys over the next 7 to 9 minutes about how a quantity surveyor can help you. But enough about me. Hi, George. How are you?
Yeah, hi. It's George here from Dual Tax Quantity Surveyors. Nice to meet you, John.
Lovely to meeting you. Do you want to quickly explain and introduce yourself and tell us a little bit more about Dual Tax and what the hell is a quantity surveyor? So for those people out there who may have heard of it but never engaged you guys, they have no idea what they're missing out on.
Yeah, sure. Sure, not a problem. So my name is George. So I'm a business development manager for Dual Tax. So pretty much I help generate business. I do a lot of networking with referral partners, and I speak to a lot of our property investors and clients that's looking to get the tax depreciation schedule done. So with Dual Tax, the business itself has been around for 6 years, and to do tax depreciation schedules, you actually need to be a qualified quantity surveyor. So with quantity surveyors, we're like a qualified construction expert that calculates and estimate the cost of the
construction expert
costs. Yeah.
Yep.
So just think about us. Think about us like we act like sort of like maybe financial advisors for the construction. For the construction role, so we work out the construction costs from the start of a project. So this includes residential, commercials, and infrastructures. So with quantity surveyors, we branch into we can branch into many sort of roles. So for one of the thing, so we specialize in tax depreciation schedules.
That's a big one. Yep.
Yeah. So with tax depreciation schedules, it's a one-time report. It will last you or your clients for 40 years on the construction
40 years?
40 years. So you only need to do it once.
I don't know many properties that's held for 40 years these days. Go on. It's almost as old as I am.
Yep. Well, that's what the ATO says. So it's a one-time report, lasts you 40 years on the construction date of the property. We work out the wear and tear of the property, and then each financial year you get like a tax deduction on the property, and which once you receive the report, you take it to your accountant, and they'll just use that to work out your tax return, maybe offset that against your taxable income.
So you mentioned accountants, and many people, when you think about tax depreciation, the first person to think of is the accountant. But I also know there's a certain limit to what the accountant can do. But what does everyone think of an accountant when you think of property depreciation, but they don't think of engaging a quantity surveyor first? Because I know there's a massive difference. And then with you guys, you guys can do stuff that accountants can't do.
Yeah, like I said before, so the ATO, the Australian Tax Office, recognizes us as quantity surveyors, where we can only do tax depreciation schedule, because we like I said before, we work out and estimate the costs of a construction building. So with accountants, because they do the tax, they do the tax returns for their clients, and then immediately accountants will look at the client's taxes, and they'll look at their the data and the information, and they'll be like, oh, hey, you got an investment property. I suggest you get a tax depreciation done, because it will help you save money on taxes.
An accountant can't do that, but a QS, a quantity surveyor, can do that.
Yeah, that's where we come in, and we do the tax depreciation schedule. So yeah, we come in, so accountants and QS work hand to hand together really well.
So tell us a little bit more about the cost. So you said there's a one-time report for 40 years. I've spoken to a lot of clients. Obviously, I had a few referred to you guys as well, and the customer had a good outcome. So tell us about the cost. So I noticed there's a cost, and it's one-off for 40 years. And is that cost tax deductible? And why is it? How is it going to benefit the client?
How's it going to benefit the client?
Yeah,
so like you said, the cost. So like I said, so like I said, it's a one-time report, and you only need to do it once. So it's not like every financial year you have to go back to a QS and do another tax depreciation schedule. So
how much is the cost there?
The cost?
Yeah.
Oh, for a tax depreciation schedule?
Yes.
So our general fee is $590, including GST, and we'll include a full inspection of the property. So we'll go out there, we'll inspect the property, and we see what we can work out to for wear and tear, and we work it out.
Is the cost the same for commercial and residential as well, or is that just for residential?
Yep. So it's $590 including GST for all residentials, and with our commercial starts at $880 including GST. But with commercial, because it is a bigger job, the size is bigger, and there potentially could be more works involved. So if there's fit-out costs involved, there may involve more costs to it.
And because the cost is linked to an investment, can I ask, for the benefit of everyone out there with an investment and they're thinking of getting a tax depreciation schedule, or they're thinking of selling, is the cost payable tax deductible?
Yeah, so the report itself is tax deductible too.
Okay, wonderful. Now I want to bring on to a last question there, and this was something that I actually picked up on from your social media, from Dual Tax, and I was like, wow. And I want to ask, just for the benefit of everyone watching in the video, what are the differences between repairs, maintenance, and improvements? Because apparently there's a big difference, and until I saw it, I had no idea. So, don't need to get too technical on us, George. Don't need to show off here. So just tell us, what are the fundamental differences between repairs, maintenance, and improvements, in your own words?
Yeah. Yep. Okay. So with repairs, repairs like it's the wear and tear of a property. So, for example, if the aircon is broken, or like window is broken, or there's like a leak, that's a repair. So you're fixing something. Maintenance to prevent like a deterioration of the investment property. So ideally, when you have a property, you want to, for example, you want to maintain it. So you don't want to prevent, let's say, deterioration of the company of the building. So it could be like pest control, cleaning the house, or your apartment, or painting, for example.
Isn't painting considered an improvement?
Well, no, because it's maintenance, because you're painting the house to prevent deterioration of the property. So that's where improvement comes in. Improvement is like to improve the structure of the building for material value, for materials. So for market value and income.
So what kind of examples have we got there for improvement? Are we looking at, let's just say we get I don't know, what kind of example have you got? What qualifies as an improvement?
So
a new aircon,
yeah, so installing new aircons, renovating the bathroom. So you're ripping out the whole bathroom or bedroom, installing like maybe new floor tiles or carpet, or maybe adding an extension to the back of the house, for example.
Lovely. So the way you guys calculate repairs, maintenance, and improvements for depreciation schedule is different, or it's different.
Yeah.
Wow. Because for a layperson like me, it's all one broad category, one broad stroke of the brush, everything's the same. Okay, lovely. And so tell us how for the consumers out there, for those who want to reach out to you, how can they reach out to you, George? Or is there obviously for those out there, I'll put the comments and the referral links to Dual Tax and George in the comments below. But tell us, how can we reach out to you?
So I can reach out to my email address is george@duotax.com.au, or you can jump on the website, which will have the office number, or you can contact me on my mobile, which is 0481 948 009.
I know that number now because I've just saved it as well this morning. Lovely. Any final parting shots there, just to for people out there based in, because you're in Sydney.
Yeah.
And most of my clients are obviously based here in Metro Melbourne, in the western suburbs. Is there something out there you want to just say quickly to anyone out there who's still watching this video? We're about 9 minutes in, and let me reach out to you or something.
Oh yeah, like I said, I do Australia-wide. So we've got Quantity Surveyors across Australia that helps us out with doing depreciation
So
schedules.
it's not you turning up. It's not you turning up. It's one of your team, someone from your team turning up.
Yes. Exactly. Yes. And it's coming towards tax season time, so if you're looking to get your depreciation schedule done, hit me up. That's
right. Definitely. I like that. I can't go wrong with that one. Well, thanks for watching, everyone. Again, it's John Ng from Money Jar Concept and George Nguyen from Dual Tax. Hope to see you one day, George. And for those watching, I'll leave all the necessary information at the bottom. Reach out to me, and see you, everyone.
Bye. And thank you very much, John. Pleasure.